Real Country 1430 AM and 107.3 FM WRDN. I'm Brian Winnekins, and joining us today, John Heinberg with Total Farm Marketing. We're going to had a chance to talk with John at the NAFB convention. Thank you to our sponsors, including Elsivia Co-op, Compeer Financial, Annabis Silo, also Osteoplastics, Wisconsin Farmers Union, Synergy Co-op, Wisconsin Corn Growers Association, and the Animal Wellness Center of Buffalo Valley. And John, boy, over the last few weeks with the markets, we'll start with dairy. They seem to be kind of in a trading range here, but at least we haven't seen the big fall off.
Yeah, we had a nice run here just a few weeks back, hit some new highs, and we've kind of come back off of that again. Really kind of watching what's going on in that cheese market. A lot of volatility there in terms of prices. Some of that may be tied to the logistics, also some of the holiday buying that's going into this window here. But we're starting to see a little bit of a buildup of supply because of some of those logistic concerns. So that keeps us always a little bit cautious. We have milk pushed into about the $18.50 mark for next year. The other day, or about a week or so ago, it's probably a really good opportunity for producers to make sure you're thinking about those longer range plans and making sure you lock in some decent numbers if you got those abilities to. So, but again, it's going to be a market. We're really watching what's happening on the demand side of the equation. Production continues to stay strong. Now we got this recent surge here again in feed prices too, so we'll see how that kind of weighs in as we move forward into 2022.
Those supply chain issues, especially with exports and those input costs, do dairy farmers need to be concerned about 2022? I know at National Milk, they're saying, we could have $21, $22 average milk this coming year. But these outlying factors, could that affect that?
It always comes into play, and producers need to make sure we're looking at those different strategies that are out there. The DRP program has been very successful. Find yourself some price points that you can at least make sure you protect the bottom side, where you at least got some profitability locked in with those milk values that we have. If those don't work, you got the upside still at least wide open to the price if the market does go that way. That's where those tools come into play. I mean, to minimize the cost on the bottom, even though you may lose that value, is a lot more important than watching things fall apart and watching your prices come tumbling down, really hurting those margins.
Talking with John Heinberg from Total Farm Marketing on the grain side. The soybeans recently, what's the deal with meal it's really driving the whole grain complex, it seems like?
There's a couple things I think going in play here. First, I've got some talk here just last few days. Argentina weather is maybe turning drier. Argentina is the world's largest supplier of soybean meal, so that obviously brings that into question. And that was a market that was extremely oversold. It was the backside of the soybean oil trade basically for the whole year. And now we're seeing that basically the shorts getting covered in that window. We're seeing some demand move into that market. Plus also, too, we're out looking at competing feeds. You got DDGs at a higher price level. Producers are looking for a better source of protein. Soybean meal was cheap at that time frame. Then I think we're seeing some speculator money move in. It's something we've been watching in these markets. It just seems like what's the hot market this week? And this week it seemed to turn into soybean meal and beans. Following suit, we saw some meal over $40 higher now since the start of the month. That's a heck of a jump in a market that's been really quiet and really depressed for the most of the year.
With the upcoming year and the increase in fertilizer and input costs, are we going to see acreage battle?
I think that's going to definitely come into play. We've had some touches on that already. Just also looking at the global food supply too. We got a lot of demand for wheat on the global scale. That's why we're seeing such strength in wheat prices. Each one of these is going to try to find a way to buy some extra acres because we're just tight on grains globally here. So that's something we're going to have to really watch. And also, the biggest thing too with beans, what's going on with that South American crop? How does that come into play? There's a couple different ways you can get acres bought. A, raising prices, which we kind of saw at this point. The other way is breaking prices down on the competing grains. So that's something to keep an eye on. So producers, take advantage of when you got some numbers in front of you. Find a way to protect yourself, whether you're making some sales or just using some put strategies to keep that floor underneath this market here, because again, black swan events can happen very, very quickly, and we got a lot of volatile things going on right now in terms of the global scale.
And John, if producers want to maybe reach out and chat a little bit more on this, how can they get a hold of you?
Sure. Love to chat with them anytime. Feel free to shoot me an email at johnh@totalfarmmarketing.com. Give me a call at the office, 800-334-9779, or feel free to shoot me an email, check out our website at totalfarmmarketing.com. A lot of great information there. My information's there as well. Love to chat with any of the producers anytime and just go through some ideas.
John Heinberg with Total Farm Marketing. We're at the NAFB convention. I'm Brian Winnekins for WRDN.